is it safe? That's really the question you want an answer to, right? It's not just investors, but every American wants to know what another monster hike in rates means for them and their family. Stock investors are worried that continued hikes will keep pressure on equities. And all Americans are now worried that the end game for the Federal Reserve is to push the economy into recession and take inflation down with it. Well, you're not wrong. Welcome to the Money Runner. It's the day after. I'm David Nelson. Those concerns are real. The good news for investors is that the TINA principle, there is no alternative, that's dead. For more than a decade following the financial crisis, markets have lived under a doctrine that there is no alternative to stocks. The Fed kept rates low for so long that you were willing to pay higher valuations for the income streams and dividend stocks offered. Bonds and fixed income, they're back. Today, you can go into the market and buy U.S. Treasuries going out just 2 years and lock in a better than 4% return. 4%. I know it doesn't sound like a lot, but to a lot of Americans and institutions who want nothing more than a safe return on their investment, it's attractive. Those higher yields will continue to limit the returns on stocks because now there's competition. And competition in almost anything in life generally lowers prices. As for the recession, Jay Powell doesn't think so. The Fed still believes they can engineer a soft landing and still deliver on the other side of their dual mandate. I'm here to tell you that's a lie. Employment data is backward-looking and tells you what conditions were the month before. In just the last several weeks, we've seen layoff announcements from a number of companies. Peloton, Wayfair, JP Morgan, Microsoft, Remax, Bed Bath & Beyond, 20% of their workforce. I could go on for another 5 minutes. Just this week, Ford cut their forecast for EBIT, or earnings before interest and taxes, by 34%. In part because they can't secure enough parts to finish the cars. If you can't make cars, you don't need people, or at the very least, less of them. How long will it be before Ford announces a layoff? The odds of a recession as we head into next year are high, and the real question is, how deep? If you like today's Market Minute, please hit the subscribe button. Reach out to me if you've got questions. I'll get back to you as soon as I can. I'm David Nelson.